Welcome, everyone, to a special live edition of the Smarter Trading Podcast, where myself and our awesome guest today are going to be chatting all about the current market environment, where we see opportunities, and where there might be risks. We're doing this live, so we want to hear from you over the next hour. Drop us your thoughts and questions in the chat box throughout the show. And now for a couple of short announcements before we get started.
Evan Medeiros is the founder and CEO of The Trade Risk. All opinions expressed by guests are solely their own opinions and do not reflect the opinion of Evan or The Trade Risk. This podcast is for informational purposes only and should not be relied upon as the basis for investment decisions. Evan and guests may maintain positions in securities discussed in this podcast.
This episode of Smarter Trading is sponsored by Investors Business Daily. IBD has been around for over 35 years, helping investors navigate each and every market cycle. If you want the best analysis and actionable trade ideas from the leader in growth investing, check out IBD Digital. Go to investors.com/Evan, that's EVAN, to get your first 2 months for only $20. Subscribe today and start trading smarter at investors.com/Evan. Thank you, IBD, for supporting financial education and making this episode possible. Now, let's get on with the show. All right, we are live. Hello, everyone. Hello, Mr. Brian Lund.
Should have worn my IBD shirt. I've got like 3 of them.
We could have matched, right? We've already got, so me and Brian discovered before this that we're both rocking the Ember mug here, keeping our beverage. I guess we're expecting a long conversation because I think this keeps coffee hot for like 90 minutes.
That's the next sponsor right there, Ember mugs.
I reached out to them. Actually.
I bet you did.
Fun fact. They had a listing and they were like, we're interested in sponsoring podcasts. And I reached out, said, hey, look, I'm a fan. I own your product. And they just totally ghosted me. So never heard anything. But that's okay. We've got a good sponsor here. We've got a good show lined up. And for those of you who may not know Brian Lund, he was with us on, I think it was episode 7 back in June, summertime of 2021. And Brian has been investing for 35 years. He's worked all around industry. I don't think he's too hard to find. He's got the Lund Loop, which goes out weekly. So we'll talk a little bit about that. We'll talk about his background. And I thought a fun place to start would just be the madness that is markets this year. You've been around for 30 plus years. You've seen it all. Is this one scary? Does it get easier? What do these pullbacks feel like for you now, or corrections?
Oh, so many questions. It's hard to put it in context because, like the last market, I mean, I guess there's a little bit of a parallel between some parts of the financial crisis, but really the last market that was this crazy was probably the .com implosion. But I was, what was I mean, that was 99. So I was like 30, something like I was a different person. Right. Sure. It's like trying to remember. It's like if you have a grandparent or someone that passed away, trying to think of how you related to them when you were a kid, sure, right, and how you would now. Yeah. So I can definitely say that with crypto's crazier than the 90s. I was saying this about maybe a year and a half ago, and I got some OGs that were there with me that said, no, it's not there yet. It's not there yet. But I thought it wasn't. I think it definitely is now. I mean, crypto's just, it's silly.
Yeah. Oh, yeah. It's crazy. I mean, the volatility over there. I mean, I guess I don't know that the market size may not be as big, I guess would be the only thing. Like, I don't know if there's as many participants in crypto now than there was in the .com, but still, I mean, it's just gut wrenching volatility and movement and 24/7. You never sleep. I mean, you can't sleep.
Yeah. I mean, that's the thing. Like, I don't know if on a nominal basis, money wise there is, but in terms of our consciousness, it's way more present in our lives because, right? I mean, in 1999, you had no social media really. You didn't have. I mean, it's always. I have to think like, what did we have back then? Like we didn't have iPhones in our pockets. We had, technically there was CNN, but you didn't have everything on a loop. So we've got this, this feedback loop that makes crypto and also what's going on in the market just so much more of our lives than it was back then.
Sure.
Definitely.
Yeah, that's a good point. That's a really good point. All right. Well, I do want to spend most of this time. And so everyone, I invite questions or markets you want us to look at today. I do want to make this actionable and timely with what's been going on here. So maybe we just start with kind of the broad markets. We're getting a nice rebound today, yesterday and today. But we're still, we've gotten hammered here throughout the first month of the year. So I guess, let's see. Do you want to pull up a chart, Brian, or you want me to share a chart? What's more comfortable for you?
I can pull up a chart. Let's see here.
Yeah, maybe talk us through, maybe just, Friday we got that reversal. Today we're getting, I don't know, I guess a follow through day if we want to give it that label. Like, what are you excited yet? Is this a start? Like, what are we looking for here as you kind of stare at this?
Well, look, I think the first takeaway is that the market likes Brian and Evan. Right? They like us when we're together because the market's rallying, right? I mean, that has to be what it is.
That's right.
But look, I don't think there's any mystery to what's going on in the market right now. I mean, we all saw this massive reversal day, right? And I mean, at this point, when we were down here that day, it looked like the end, right? It looked like we were just going to be, because there's a lot of room down here, right? There's not, look how far back we go to get to some serious, support. So when we had that reversal, it felt great. And we had record volume. I think on a dollar basis, the QQQs were like the biggest day ever. We had ARC that had record volume. And it looked great, but I said on my review video that day, I said, it almost looks too good. Like it's almost too cliche, right? This is like, it was the exact type of action you would see if you were going through a Edwards and McGee book, a technical analysis book from the old days, right? So I thought, well, okay, maybe we're going to, maybe we'd gap up the next day. And then we had this problematic area here. We kept trying to get back above. We first of all, we couldn't even get back above. I got my wrong moving averages. First of all, we couldn't even get back above the 8-day moving average, right? We kept getting rejected. We couldn't get back above the 200. We tried to go above, fail, right? And I said, look, we need to get above this day, which is Wednesday's high. If we can get above Wednesday's high, then maybe we can start, get some traction, start moving higher. We got that, once again, it looked a little dicey here on Friday, and then we had that late day rally and everything started to lift. And what you noticed is that even the junky stocks, right? All the growth stocks that have been doing these false starts for the last couple of weeks, they all started to lift. So that was great. And then today we have the follow through. So, it looks, knock on wood, looks like we're going to close above last week's high, which is great. The next level we have to worry about is here, which is like, basically 4,500, give or take, right? And so the question is, do we run up here and we kind of pause? We like maybe run into some resistance at the 50-day and then roll over and go back down, or do we come up here and maybe go sideways for a little bit, digest the move, and then try to move back to all-time highs? And I don't know, I don't know what we do. I mean, the Qs are a lot weaker than the SPX. I mean, they're still below the 200-day moving average. And then this is, of course, this is the big one everyone worries about is IWM. We had this big base, and I'm sure, you feel the same way about bases as I do. Bases are great. The bigger the base, the bigger the break. But then we had this false breakout, and often when we get a false breakout, we get pretty substantial moves in the opposite direction, which is exactly what happened. It looked like we were going to hold here, and then we broke through here. So we're still, we're below all the move. Well, we're just coming above the 8-day if we close here, but we're below all the major moving averages. We're still below this big base, which is going to be resistance. And this is the broader market here. I mean, this is what is going to sustain the market is if IWM goes higher, and that's the big question mark.
Yeah, I love it. I mean, I'm on the same page as you with everything that you just sort of laid out. I mean, I thought sentiment is tricky to nail down, and it's so microscopic with the way I'm sort of looking at it. But when I look at sentiment across just Twitter and social, the past week or so, it has been really tough to find anyone that's excited about the market, though, right? Like, I mean, maybe it's the technicians, maybe it's a biased sample of traders that maybe I follow and listen to, but like everybody hates the market coming into this week, I mean, they probably still hate the market for the most part. And I feel like this kind of now, you know, this little move up we're seeing maybe speaks to that, right? Of how offsides things have gotten. I don't know if you feel the same way in terms of sentiment or how you can measure the social
Yeah.
side.
Well, sentiment's such a dicey proposition because
Yes.
so much of it, I mean, I guess you can technically measure it, but a lot of it's just kind of gut feel.
Yeah.
Like I tell this story all the time is back in the day before social media and everything, the way that you gauge sentiment for the market was you go to your local bookstore, right? You go to Barnes and Noble, right? And when the market was super frothy and everybody was into it and everyone was making money, there would be like a huge section of investing and trading books, right?
That's funny. Yeah.
And then after the market would, like, if you went to a Barnes and Noble in like 2000, the end of 2000, 2001, like they'd shrunk it down to this big, right? There's like 4 books, right? And then of course you have the magazine cover phenomenon, which we all know. And then the other one that you'd get is if you ever start seeing those Gorilla Trades ads, right? That used to come on TV late at night. Whenever you start seeing those around, you knew that there was a market top coming. So that's how sentiment works. It's kind of a fun thing to look at, but I do think there's been a lot of hate on the ARK fund in the last 2 weeks. A lot of Kathy Wood hate, and I don't know. Once again, it may just be too cliche, but after that stunt that Kramer did last week, where I guess he dumped Cuddy Sark over all the individual names in the ARK fund on his thing. Like, I mean, we all know he's a clown, but he also he's got his finger on the pulse of, what investors think. So maybe that's a contrary indicator. Maybe him finally dumping on ARK now that's down 60% means we have a short-term bottom in place, possibly. And you marry that narrative with the technicals, that's where it becomes important, right? You can't just put the narrative by itself. That's nothing. But if that is, if that coincides with what the technicals are telling you, then it is a little bit more powerful.
Yeah, I like that. And I think that's a smart way to sort of think about it. I mean, the chart that I was sort of sharing, let me pull up my screen here, over this past week was really just kind of looking at now we're going to get technical pretty quick, but the jargony sort of Bollinger Band look here on like the weekly time frame. So let's just kind of throw this screen share up here and get you going. So here's the NASDAQ 100, and you can really sort of just pick any of the markets, but this was the weekly kind of standard 2 and 20 Bollinger Band, which is, getting pretty nerdy, but basically, it's just looking at the average kind of movement that you might expect. And the majority of movement, markets like to spend inside of these neat little orderly bands here. And kind of what Brian is saying is we've got essentially like sentiment that was getting extremely kind of bearish, breakdown, negative, as we had already been down, 15%, and we're trading below this little lower sort of Bollinger Band. And you can just pick your market. If you go to the S&P 500, we pierced below it, and we got the heaviest volume reversals that we've seen. So yeah, I think it all sort of makes sense. I think we're set up for at least a little bit of a bounce here, but I'm not going to call the bottom. I don't know. We could easily leg down in the middle of February, right? Like, who knows? But it's certainly been a dicey, and like you say, Brian, the ARK, if we look at ARK or, any of these individual stocks, I mean, Square, and I mean, right down the list, I mean, Zoom, any of these prior names have just gotten totally obliterated here. So yeah, that's been the sort of fun landscape that we've been in. Are you having fun trading the future side of things? I know you're a futures trader and you like that intraday stuff. So has that been a trade for you this year?
So it's really interesting you say that, because I mentioned something about this in last week's Lund Loop. So if I look at the spectrum of trading that you can do, trading to investing, you've obviously got passive investing, then you've got buy and hold, then position trading, swing trading, what I call overnight trading, like where you're setting up a trade that you're going to hold overnight, but not more than that. So that's a little bit less than swing trading, day trading, and then scalping, right? And it obviously comes on a spectrum from, the least amount of work to the most amount of work, which is scalping. And, I'm a I would say I'm a B- scalper. I'm pretty much profitable, but it takes a lot of work, right? I mean, in my best incarnation, I'm maybe an A- scalper, but I don't like scalping. And I found myself last week doing a lot of it. Coming out of the Fed, I was scalping at night. I was scalping overnight Wednesday, which I almost never do. And it was crazy. Like at night, the NQ was going 20 points at a clip overnight, which it never does, right?
Yeah.
And I came out of last week with a really important realization. I think part of being a successful trader is always kind of checking in with yourself on a regular basis and reevaluating. Like, it was a really bad week for me last week, stress wise, right? Like I was scalping. Yes, I did okay, but like the trade-off was just not worth it. And, you know, scalping's the stupidest way and the hardest way to make money, in my opinion. Day trading, somewhat easier. Swing trading, much easier, right?
Yeah.
And position trading, the easiest. And if I had my choice at my age, I would rather be position trading / swing trading. But the markets don't always, you know, we have to be in the right market for that. So the long answer to your question is, I have been more active the last couple of weeks and last couple of months, but honestly, it has not been a pleasant experience. And so I had to kind of check in with myself and say, do I really want to be doing that? You know, like, is it worth the money to have that stress level? You know?
Yeah, totally. Yeah, I think I love that approach, and I don't know that we talk enough about that, or and this is obviously a personal choice, personal decision, but this ties back to we started talking about crypto earlier. This was one of the realizations I very quickly came to with crypto trading, is that yes, there's a tremendous amount of volatility and opportunity on a day-to-day basis, but let's face the facts here. We've got these nascent exchanges that are not as good and as powerful as traditional markets, right? There's no IBKR. I mean, yeah, we've got Coinbase, but like still that thing goes out every time you actually need to trade. And you can't put sophisticated order types in there. Like, it's a headache, right? And then it trades 24/7. And then, you add on all these risks. Then you're worried about your money or a hack or whatever. That was the equation I was looking at, was like, okay, yeah, I could probably make some good money in this volatile new asset class, if you want to call it an asset class. But is it worth it? Is it worth staying up, being worried, stressing all the time? The answer I basically came to was no. And I try and just do less there and do a long-term trend following approach for like crypto things. But I think your point's spot on. And I appreciate the candidness of the toll and taxing nature that markets can take on us.
Yeah, I think on your point about crypto, is I was a skeptic of crypto early on. Then I said, hey, I'm a trader. I can trade it. I got into it really big. And then in last November, I said, you know what? I need to get out of this because I'd gotten really big really quick, and I wasn't feeling comfortable, right? Mm-hmm. And I told all my subscribers, I said, I'm getting out of everything I have in crypto. And I was kind of re-examining why it was I felt uncomfortable, because, like everyone says, well, if you can chart it, technicals are technicals, right?
Yeah.
But like you said, I don't trust the infrastructure of these cryptocurrency exchanges. And I use that term very loosely. Last week, Interactive Brokers went out. It just went out. Like, I had a position in Interactive Brokers. I had a stop in. It hit my stop. It didn't sell. I flipped it to a market. It kept giving me an error. All of a sudden, across FinTwit, people were saying, what's going on with the IB? There was a problem with their algorithm. It was the exchange, I think, right? But there was a problem. You couldn't sell for about an hour and a half. You could not sell. Now, fortunately, at the time, it was a small position and the market wasn't moving fast. But if Interactive Brokers, which is one of the most rock solid brokers out there, which is battle tested over 30, 40 years with trillions of dollars worth of transactions, if it can still have problems, how are these new exchanges that are, first of all, they're decentralized by design, and people think that that's a benefit. It can be, but it can also be a massive flaw. And so how are these going to handle it when everybody goes for the door? And by the way, everyone will go to the door at the same time.
Yeah.
And that's exactly when you need the systems to hold up. and that's exactly when they'll fail. So like, I don't have a problem looking at a chart of, Cardano or Helium or whatever and saying that. My problem is I feel like if it goes south, it's going to go south like that.
Right.
And people think, well, I put a stop in, so I'm safe. No, your stop can get jumped right over. It can not execute. And, good luck trying to get on the phone with Coinbase or Binance or anybody to say, hey, my wax P position is, so. And by the way, and I think this is an important point too. I'm not a skeptic about blockchain or about the utility of the underpinnings of cryptocurrency. I'm just a skeptic of all the speculation. Like, I'm sure blockchain technology will be fantastic. It will change the way we live. It will be here for years and years and years. I don't think that necessarily AMP coin is going to be here in years, or WaxP or whatever these other ones are. And I think that's the problem. People have a problem with differentiating between what's the speculative part of crypto and then what's the real utilitarian part of crypto that will maybe last, beyond the next couple years.
Yeah, I totally echo all of your thoughts. I mean, it is exactly the way I think about it, and I am waiting for the day that we have just a tightly coupled infrastructure where, like, maybe it's IBKR, they're slowly getting into, offering crypto, but it's still kind of a pain. Like, I would love an easy way to move funds between my traditional stocks to, a Bitcoin account that I could trade with futures and to be able to hedge things, like, just to do it in a professional way, is what I'm dying for someone to sort of solve that. So I could actually, just go about it. But I hate these wire transfers to these other exchanges, and these other exchanges are, may or may not be licensed and all this stuff. Anyway. It's definitely a risk management problem. I think everybody needs to think about. So, and
like I said, it will all go, like, everything will work until it doesn't work. Right.
Yes, exactly.
I mean, that's the thing. Yeah. People go, well, everything's fine with crypto right now. Well, the system really hasn't been stressed yet, but when it does, and then we're all going to look back and it's going to be so obvious, right? Yes. We're going to be like, how did we even think that was something, right? Or whatever it is, right?
Right. 50 billion market cap.
And it's not like this hasn't happened before. Like, when we had before the financial crisis, I would go to parties and people would talk about how they own 2, 3, 4 houses, right? They were flipping houses, and everybody had all these reasons why it will continue, right? Why the housing market would continue to go up, and Wall Street would tell you why it's going to work, and why all the financing and the no credential loans and no doc loans, why all that made sense, right? And then when it all fell down and you see these postmortems, it was so obvious that even the people that were part of that process knew at the time. They're like, oh yeah, we knew there were problems, but there was just money to be made. I think that's what's going to happen with crypto, is when we finally do get that flush out, we're going to find out that, like, oh no, they knew, the people that were at this exchange or doing this or had this, they knew that it wasn't sustainable. They were just trying to make money while they could. And we'll just go, oh, that made perfect sense.
Yep. Let's get the money while we can. I mean, that makes a lot of sense, and incentives drive sort of a lot of what we're seeing here. So,
and think about, we do the same thing. Like, I don't know what 90% of these coins do, but I still want to try to make money off them.
Sure.
Right? So we're kind of doing the same thing on a smaller basis.
Yes. Yeah, absolutely. Yeah. All right. So I've got a couple of specific charts, or actually, I wanted you. So I see you seem to keep a pretty tight pulse on maybe the pot stocks, cannabis, marijuana. What are you seeing there besides being a customer or anything like that? I don't know if you want to share charts, but
let me just slide over there. The only reason I have a pulse on that is because I think most of pot investors are delusional, and have been delusional. Like, when your investment thesis is just you wait, right?
Yes.
That's a bad investment thesis. And I mean, you can look at, let me flip around there and see what train wrecks we can take a look at.
It's been a train wreck. I mean, I have seen I'm not a fundamental, as my audience knows. I don't really do strong fundamentals or anything like that. But I did see some smart people I respect starting to actually look at some of these stocks now as like value plays, or they've gotten cheap enough at these levels, and so that's kind of interesting to me. What are your thoughts on this whole trend?
So here's my initial thought right here. Right, that's all you
Mhm.
need to look at is this is the US pot ETF, which is in a downtrend.
Yeah.
Right now, we just hit some support here, and we got a nice green day here, but I have not seen anything in this yet to show me that we are going to change this. Right, not even forget the long-term downtrend or the intermediate-term downtrend. How about the short-term downtrend? Right.
Right.
And if you look at Canadian pot stocks, it's the same sort of thing. And of course, you can go look at, you can look at Tilray. You can look at, Tilray, the stock that was once $300 and is now $5, right?
Easy.
So here's my thought process in pot. From a technical standpoint, it's a no-brainer, right? There's just nothing there yet. I mean, if you have a long-term outlook and you want to start getting great, but right now it's still guilty until proven innocent. Everybody will tell you that the story used to be like, well, once New York gets legalized, once California gets legalized, once all the and nothing happened, right? And you can go out to the streams and see all these fundamental reasons why things are going to change, and it's been that way for 2 years, and people just lost tons of money, and more importantly, the opportunity costs for being in pot have been way too high. So that being said, is 2022 the year that we turn around? I don't know. I mean, but the technicals will tell us. That's the thing. I think if I put on my fundamental hat, I think the problem with the space is, well, I mean, about 4 or 5 years ago, I talked to a really smart guy in this space. And I said, are you buying any pot stocks? And he said, no. And I said, why not? He said, I've looked at all their cap tables and they're just train wrecks. So the cap table meaning they're so dilutive, right?
Mm-hmm. Mm-hmm.
And that's what people don't understand is like, there can be a great fundamental outlook, but if the financial structure of a company is bad, it's not going to matter. And by the way, you can also have a great company. Like, people love Peloton. Peloton's a great exercise bicycle, right? It's just a terrible stock. Yeah. So he told me a long time ago that the cap tables are bad. I think the other problem is you went from an industry that was on the periphery, right? It was technically illegal at some point. Yeah. And then it all of a sudden became legalized, but you had the same management and the same executives coming into the legal space. And not that they were bad or dicey, and some were, but it's a whole different ball game to operate in a non-legal, non-licensed environment, and then to figure out how to adapt in a licensed, legalized environment. And I think a lot of management couldn't make the transition. They kind of played fast and loose. I mean, we saw that with some of the Canadian stocks that ended up getting delisted because of violations. And then, of course, the overarching thing that I'm sure all the pot bulls are yelling at me right now is the Safe Banking Act, right? Is that you can't. We're not federally legal, so you get these pot dispensaries that literally have mounds of cash that they can't, access the banking system with, and then you have institutional investors that can't, by their charter or whatever reasons they can't invest. So I get all of that, and I do understand that those things change. The tenor and the tone of those stocks can change, but when will that happen? I don't know. The big thing was, not to get political, but everyone thought like, oh, it's going to be really bad under Trump because he's a Republican and he's going to be very anti-pot. Well, he actually was not very anti-pot. And they thought, well, Biden's going to come in and then they're going to legalize everything. And Schumer and Biden, they haven't done anything, right?
Yeah. Right.
And there's bigger fish to fry in Congress right now. So there's just a lot of headwinds there. But like I tell people, you'll just wait for the technicals. Just wait for the technicals to show you. Like if this is the year of pot, 2022 is the year of pot, you're going to have so many opportunities to get involved strategically, where you can manage your risk and not just go in blindly and say, oh, because I know there were people that came into, if you look at MSOS, I know there were people here that were like, oh, I just wait, here, just wait. Oh, here, just wait. And,
Yeah.
It's just not a good way to approach it.
Yeah, no, you know, it's on my watch list, those ETFs. And I'm waiting for some signs of life. I think one trade in it last year, and yeah, on one of those reversal attempts, I kind of jumped in there to see if I could, you know, find some type of reversal, and I just quickly got stopped out, and I haven't looked back since. But I am starting, like I say, I've got a couple of people I sort of respect that are starting to dip their foot in, but again, technicals haven't shown it, so we'll see.
Well, and I think the other thing is that you know, my you know, JC, right? JC
Yep.
Peretz, right? So he said something the other day that really hit home. He said 99% of all FinTwit arguments could end if people would just agree they have different time frames.
Oh, 100%.
And those people that are dipping their toes in, I know people that are as well, really smart people that haven't been interested in pot at all, and in the last 3 to 6 months are like, I'm starting to get in. But if their time frame is 5 years, right?
Yeah.
Then you know, that's different than a trader who's looking for a 2 to 3 day pop. And
That's
it's fine. It's fine to do both. Like, I don't care. Be long term, be short. You can, by the way, you can be long term and short term at the same time, right? You can be building a long term position and trading, but just know what your time frame is, and that probably helps with 99% of the problems right there.
Yeah, I totally agree. I mean, if someone has a 5-year time horizon, they could be a year early. They could be a year and a half early. It's fine for them, but it's going to be awfully painful for you if your time frame's 2 months or a month or a week.
Yeah, and it's really painful for the person with a 5-year time frame if they really don't have a 5-year time frame. Like, in their mind, they convince it like, I've got 5 years to wait, but then the stock drops 30%, and they're like, yeah, you know, they're freaking out.
Oh yeah. I have definitely been in that camp. Yeah, I can wait 3 years on this stock, and then a month later, I'm like, Jesus, this is horrible.
Well, I think a lot of people have been in that camp on the growth stocks because,
oh yeah,
I mean, when Peloton, you know, is down 20 or 30%, and you know, people are like, oh, it's easily going to rise, you know, and then it's down 40%, and you know, and then, I mean, that's just been brutal.
Yeah, it's been a pain trade for sure. So I do want to talk about that. So we're going to take a quick break right now. We're going to hear a word from our sponsor. Leave a comment or a ticker that you guys want us to look at. We're going to look at some growth stocks in a minute, and then I've got another chart I want us to look at. So we'll be back in just a moment. Be right back. Those of you who know Trade Risk know we are all about rules-based investing, and that's why we are so excited to have Investors Business Daily as a podcast sponsor. It's almost impossible to avoid boom and bust trading cycles unless you've got a system that works and you're able to stick with it. That's where IBD comes in. They've been helping investors navigate market cycles with their time-tested methodology for over 35 years, which is why you need to check out IBD Digital, their subscription service that gives you access to proprietary market analysis and top trade ideas. Start with the big picture to get a pulse on the market environment. Then browse their exclusive stock lists, like the IBD 50. Finally, use their stock checkup tool to find out more about a company. All of this is available to IBD Digital subscribers, and right now podcast listeners can get their first 2 months for only $20. Go to investors.com/Evan. That's investors.com/EVAN to get started for only $20. Now, back to the show. All right, so I wanted to ask your opinion on these types of defensive. Well, energy is not defensive, but energy is certainly working right now, and it has been working. And I also have up here, so I got energy XLE, the spider ETF in the top left. I got utilities in the top right. I got staples in the bottom left. And then we just got the old S&P in the bottom right. But my question to you is, do you try and look for any of this rotation? Do you go to defensive areas of the market when things start to get pretty ugly out there, or do you just sideline it or short?
No, so those things they should be in your long-term portfolio, and they are in mine, but they're just not, for me, they're not trading vehicles. They're just not. I don't have a feel for those space. They don't move the same way. So for me, it's just better to step out and wait, right? And then go back to the tried and true stocks, you know, like if they have a counter trend rally or day trade them. And I hear a lot of people talking about like, oh, you just rotate, like, but I'm not so sure they're really, people that say that, I don't feel like they're really trading. You know, like where you're going to go from trading Apple to John Deere. I mean, okay. I mean, I guess some people can, but it's not for me.
Yeah. I'm pretty much with you. I've been trying to find for a while some type of trading system that rotates to these defense. Like it sounds so great in theory. Like it makes intuitive sense. Like, oh yeah, market goes into correction, just go buy utilities and staples. But when you start running some of those tests and you start like putting it into action, it's really hard. It's hard to find something that's worth trading, right? Like, yeah, maybe you'll beat the S&P 500. Maybe you'll do it with lower drawdowns, but like, I don't know. It's not giving you that much.
Yeah. I mean, those are the sectors for big institutional funds that have to be invested, right?
Yeah,
By their bylaws, they have to be invested. So they go into those, you know, consumer staples, all the safe places. But like I said, they're just not trading vehicles, at least not for my style.
Yeah. So what about on the short side? Do you like to short individual stocks, or do you just like to express bearish positions like through futures and indexes?
So when I'm scalping or short-term trading in the futures, I'll go either way. I'm totally agnostic. I can go short as much as I can go long. I mean, it's a video game at that point, right? You're just trying to win. Shorting, you know, I did a lot of shorting when I was earlier in my career, and shorting is there's a little siren song to shorting, right? It lures you in because you can make money really fast because the market drops usually faster than it goes up.
Mm-hmm.
But it's a really specific skill. And, you know, you think like, oh, short in a bear market, but everybody knows that the rips in a bear market are just brutal, right? Some of the biggest up days are in bear markets. So I'm not a big fan of short. I say I used to do it more and I do it less now. And I'd rather wait. Instead of saying, okay, I'm going to short, I'd rather wait for the move to happen and then try to do a counter trend rally going long.
Got it.
And by its nature, over time, the market has a bullish bias, an upward bias. So you're already starting to fight against that. With the futures, it's different because futures are just, there's a lot of noise in futures. And so the way I try to scalp or trade futures is I never trade breakouts. I always trade extremes, right? So if it's whatever the time frame is, if it's like really extreme, short-term extended, maybe I'll short it because I think it's got to come back to the median or vice versa. So that I'm just like I said, it's more like a video game there. Whereas with individual stocks or even the indexes, there's a lot more behind the moves that I just don't want to fight against.
Yeah, that makes sense. Yeah, shorting is it's very difficult. I mean, I do it, but it's, you know, when I look back at it, I mean, even I think last year shorting only cost me money. I'm pretty sure it was pretty much break even, or I think I lost, but it was pretty much break even to slightly negative. And obviously, it was a rip roaring year last year. But it's difficult, it's tricky, and slightly different rules, probably to do it successfully.
Well, also, if you look at some of the moves, like let's say you're looking at a chart, and maybe it's taken 3-4 weeks to move up to a certain level, but then it moved down in 3 or 4 days in a big crash, right?
Yeah.
So it's easier to try to find a place to get long in those 28 trading days than it is to try to catch those 3, right?
Yeah.
So it just, you know, like some people I know do it really well. They have an instinctive feel for it. I used to do it more. And I also got, you know, coming out of the 2009 correction, you know, the market had been so volatile and it was just falling off a cliff. And then it started to bounce a little bit. And I thought, okay, this is just a shortable bounce, right? And I probably spent 6 months fighting that as the market then continued to go up to all-time highs, right?
Yeah.
So maybe there's a little bit of I guess that's not recency bias, but maybe there's some head handed to you bias there that just keeps me away. I mean, seriously, like I fought that rebound for way too long. It was super stressful. And that's why when we had this, when we had the crash from COVID, I actually put out a post pretty close to the bottom where I said, okay, bears have stayed at the party too long, because when it gets, when you get to the worst part, it feels like it's never going to end. And that's usually when it does end. And we just watched the market go like this. And I watched bears for about a year just get crushed because they kept thinking, oh, this is just a bounce. I mean, think about the narrative at the bottom of COVID. Like we thought, we didn't know what was going to happen. Who would have thought that the market was going to go up double basically in 20 months? I mean, no, that was on nobody's bingo cards. I guarantee you.
Nope. Yeah, it was terrifying. I mean, back in those in the doldrum there, as we were just cascading lower, I mean, there was no hope, right? I mean, everything was going to get shut down. When would businesses open again? How can people, keep their household afloat? Like, I mean, it was horrible. There was every reason to just want to walk away from the market altogether. And obviously lots of people did, and then lots of people just continued to fight the injection of historic amounts of cash that just came into the system. So here we are. And now, yeah, go ahead.
And I remember the exact day that we really hit the bottom. Like the market was imploding. It was about noon. My kids had already they said, hey, we're doing virtual schooling. It was rainy out here in Southern California, which it's never rainy, right? It was just, and there were rumors about runs on supermarket. Like you go to the supermarket and there was, the shelves were empty. And I actually got in the car at like 12:30 our time, went to a gun shop around the corner, right?
Jeez.
To get some ammo.
Yeah.
Right.
Oh, good luck finding it.
Right. Rain. Went to the supermarket, tried to get a bunch of, I mean, it just, you felt this anxiety among, and as you were interacting with people, you could see it on their faces, right? So you had the market imploding, you had this unknown pandemic, you had potential supply chain, and I swear it was within a day or two, the market bottom from that.
Yeah. Yep.
And that's how it always is. It always feels like it's Armageddon at the bottom. You never want to buy when, I wrote about this weekend, when Peloton is up here and you go, if it would just come in 20%, I would just buy it hand over fist, right? Or if Bitcoin would just come into, if it would get down to 50,000. But we always think that, well, here's how it's going to get there. It's going to just kind of lilt down and take its time, and it's going to carve out a nice soft angle and then just slide into a support zone. And then I'll just pick it up as it never does that. It's like this, right? And
just like we don't want to buy. Show us, just like the textbooks, have it. That's what we want to see. That's the scenario we want to see, and it's rarely like that. Cool. So I mean, we had a handful of comments. So we got Puff Pass here. So we have we already talked about our cannabis, but apparently one of us are looking good. Maybe talking about you, not me. We have another suggestion on sponsors. Okay, razors. I don't know. Maybe I didn't shave enough, or
I shaved. I trimmed my ear hair. I even put on cologne. So
this is what your PR. So Brian's PR agent basically says, like, he needs to do more live streams like this, so he can clean himself
my wife
up.
Is that
and then we have JR who left us a comment basically saying, he kind of feels the same way that we've been talking about on the crypto exchanges. And he apparently had a pretty nice trade on his GBTC. BTC traded to 68K, got out. I mean, nice trade. Crypto exchanges, I think we beat them up enough today. But it's high reward, high risk for sure out there in that space. So, I mean, I guess as we sort of get close to winding down here, I think the things that are on my mind, I mean, in terms of this current market, I mean, most of what Brian said, I mean, the bounce here, as if we can continue this bounce, what does it look like? How high can we get? What does the commitment look like? I guess, I mean, we are seeing, let's take a look at ARK. ARK still looks pretty horrible, right? It's up 7.5%, and you would not know it by that, by this overall trend. So a lot of
this is a relief rally so far.
Yeah,
That's what this is.
exactly. Yeah,
This isn't yet the start of a new up leg. That's still to be determined. So you have to be careful that you just don't try to chase something blindly here, because it can turn on a dime.
That's right. So do you pay attention to, are you trying to dissect what the Fed is doing at all here? Like, are you staring at Powell and saying, well, if they take it down to 2 rate hikes, maybe things are okay? Like, does that matter to you at all? Or
no, it doesn't matter at all. I'm not smart enough to figure out like the problem with fundamental data. I'll use earnings for an example. First of all, you have to figure out, well, are they going to beat earnings? Or are they not going to beat earnings, right? And then if they beat earnings, then you have to figure out, what's the reaction going to be? Is it built in already to a beat? Is it not? So there's like, it's like that, I'm not a Star Trek fan, but it's like that 4-dimension chess thing that they do. And there's no way to know if you're right or wrong. I'd rather pay attention to the technicals, right? Because the technicals are objective and they'll tell me what exactly price is doing and what volume is doing. Like, I don't have to guess how investors are going to react to Apple's earnings. I saw what the price did, right? So I don't know what the Fed's going to do, nor do I even know what would happen if they did do it. Like, that's my 9th grade economics class. Like, I threw those books in the trash the minute I graduated, from middle school.
Right. Yeah.
I mean, it's fun theoretically. I mean, like, you can have these discussions. There's nothing wrong with having these discussions, but
100%.
Trying to marry them to any sort of actionable trade, that's not me. I mean, I'm sure there's people that can do it, but not me.
Yeah. It sort of reminds me of almost like what you said about, and again, back to kind of the pot stock trade. And you sort of mentioned how, well, if a potential narrative, again, this is all just us kind of riffing, but like one of the possible scenarios or bullish cases for pot was essentially, Biden comes in and everything's legalized and, or, much quicker speed and off to the races. And if that was a narrative that the market really had a hand in, you have just a lot, and maybe that's exactly it. You had a lot of people playing for that, and they're just slowly being bled out here as it's been gridlock, no traction, or just no attention has been spent on that. Now, again, I don't know that is the leading narrative, but I think what Brian is kind of saying there is, like, it's tough to know what the market's pricing in. And then obviously you got to know what the market's pricing in. You got to know what the news is going to be. And then if you knew both of those, you have a shot at kind of knowing what direction maybe price would go, but that's super hard to know ahead of time.
It's hard to know. And as my friend Brian Shannon says, only price pays.
Yeah.
And it's so true. I mean, once again, it's great to have, we're going to have we're having our SoCal Stock Twits meetup out here, I think in March. And we're going to go to a brewery and everybody's going to talk about stocks, and we're going to talk about our worst trade and our best trade and what we think is going to happen. And that's great. And that's fun. And that's part of the world of trading and investing. But you got to keep that separate from your P&L and what's happening on your screens today or tomorrow, the next day. And once again, it's like, it's like what JC was saying about people figured out they have different time frames. If people figured out that they're trading using their fundamental brain, they'd go, oh, wait a minute, let me get that out of here.
Right.
We can have those discussions, we can theorize them, but when I get back to my trading, it's just got to be what price is telling me.
That's right. Yep. That's very smart.
Easier said than done. Yeah.
Oh yeah. 100%. 100%. So, all right. We've got one question coming in here on looking at some tickers. Can we get that question up? And then we're going to probably wrap with this. So we've got a couple of tickers to go through. Let's, I'll pull them up on my chart. EEM is the first one here. And I mean, I guess I'll give my thoughts and then I'll pass it to Brian. I mean, so I'm looking at a weekly chart here. So this is the emerging markets MSCI ETF. Yep. So, it looks like it peaked at the beginning of 2021, and it's just been kind of consolidating downward here for the past year. So it's 18% correction. I mean, it sort of looks a little orderly here. When I look on a weekly time frame, again, time frame matters. So for me, it's just it's a wait and see type of thing. And I would just be, if I'm a technician, just looking at this again, drawing with a crayon here. You can refine this as you see fit, but looking for some breakout, looking for a momentum move. And then the only other thing I would add is King Dollar has been very strong. That tends to put weight on emerging markets, but maybe you need to see that reverse. Brian, you got any thoughts on EEM?
So I haven't looked at EEM for months, and when I pull it up, here's exactly what I saw.
Yep.
Oh, I think he.
I'll put you in.
You
right.
need to stop. Yeah.
Yep. There you go.
Right. It was already pre-drawn. Right. As
yep,
soon as I pulled
it
up. So now it's a daily chart. Right.
Yeah.
But exactly what you said. And so basically, we're just looking like, hey, is there going to be a breakout for this big channel? If not, I don't really care if I was trading that. Right.
Yep.
FXI. You got this series of, you've got this. You have this downtrend here. You have another downtrend here. You could theoretically even say there's maybe even another downtrend here, right? I mean, it's just nothing there that I'd be interested in.
Yeah, I agree. So yeah, I think let's see. We got maybe chasing wheels. Let's take a quick tour on that, and then we're going to wind down here, folks, because we got to head on out. But pins, PINS. So Pinterest. Yeah, I mean. My thoughts. Oh, sorry, I got the chart up. Let me add it. Pinterest here. I mean, this has been a very, 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 very just painful downtrend. Maybe if you're looking at this gap fill, you're starting to see some life here. But again, it's you're not getting a trend change yet. So for me, I don't know. From a technical side, there's nothing here. If you're a value trader, if you're looking at the valuation and that makes sense to you, then buying blood makes sense. But just depends, really. Pins. What about you, Brian?
I think there's a danger on charts like this and a lot of growth charts. And the danger is that we look back at the highs in 2021 and we think that, that was a realistic valuation, right? And that we don't understand that was, and once again, I'm putting a fundamental hat on here, so take it for what it's worth. But we don't understand that a lot of these prices were just massive distortions based upon the fact that we were in a unknown world, right? A world that we've never been in before. We had the Fed and the government just throwing money out there, right? It's what, 6 trillion. We had people that were nothing to do but buy stocks. And so I think the problem is we're saying, well, this stock is here and it was up here. So, I mean, naturally it's got to come back. Like, no, this might have been an alternate reality up here that we'll never see again. I put something out like this like 2 weeks ago. People have been trading fuel cell a lot in the last year or so. And a lot of people I talked to thought, oh, fuel cell, this new company, and they're the EV space. Fuel cell has been around since the mid 90s. I traded it like in the .com boom, and it went up like 20x from 99 to 2000. And then it spent the next 20 years losing 99% of its value. Right.
It's terrifying.
Along with a couple of reverse splits. So look, I'm not saying that's going to happen to pins. I'm not saying that's going to happen to growth stocks, but the idea that they'll just automatically revert and money will come back in and take them up there, that's not a fait accompli. It may not happen.
Yeah. I love that. That's a great way to sort of maybe part here is just, the valuations that we saw, might have not been the ones we should be anchoring on, right? Those highs that we just saw in some of these growth stocks. Maybe it takes us time before we get back there. Again, I don't know. I don't think Brian's saying, that's absolutely the case, but our perception could have been warped here over the past year, and we might have to essentially reprice. That's certainly what the market's doing.
There's also another dynamic that a lot of stocks, especially ones that have gone public in the last couple of years, back in the day when I started trading, when a stock went IPO, that was the beginning of its hockey stick growth, right? Like you see Microsoft when it went public. A lot of stocks now, or in the last 5 or 10 years, have come public already at really elevated levels because there's been so much private money, so much VC money that they've squeezed all the value out of them. So they go public, they get a little bit of a bump, and then they spend a long time doing this, right? So there's also that dynamic. Never underestimate the the financial mechanics that can drive a stock. Look at the SPACs, right? All the SPACs that were going to the moon, right? And now they're dead money. And they're not necessarily going to go away, but they're just going to go like this forever, or at least for a long time.
Yeah. Yep. Great points. Awesome. Well, this has been fun. Thanks everyone for tuning in. We got a lot of questions here coming in at the end, but we have to wrap it up. So
part two, man, we'll have to do it some other time, right?
Part two. Yeah. I would love to get you back, Brian. I always love hanging out. Thanks for taking the time today. And Brian Lund on Twitter, BC Lund. Check out the Lund Loop. Fantastic writing. Brian's been writing forever. Very witty, very lighthearted. It's easy to read, and really tells just a good story. Humanizes sort of the mechanical trading side of this. So I love your writing, Brian, and thanks again for being on. We'll put all those links in the show notes if you want to check out Brian, learn more. All of this will be archived. So I think that's it. Thanks so much for being here. Thanks, Brian, for doing this.
Thanks for having me. I appreciate it.
Awesome. All right. Adios, everybody. Until next time.